Hello there. Welcome to I think it's the fourth episode of our Relevation Talks. And today it's my big pleasure to welcome my friend Othmane Zrikem from PropTech, Chief Data Officer. I think last time we spoke was in Brussels in person a couple of months ago. Welcome to the grill, Othmane.
Thank you so much, Elise, for inviting me, and happy to chat with you.
Great. Well, let's kick off with maybe your personal history. So let's understand how have you ended up in the venture world? Because Patrick Ellerman from Fundamental was saying some people in life have a certain allocation. So some people were sort of meant to start working in venture. So is it the case for you? Were you meant to work in venture, or is it by accident or coincidence that you ended up here?
I think that it's a bit of combination of both. Like as a mean of background, I started my career more in kind of the investment banking side, but I quickly ran out of the passion of that topic, and I went into e-commerce. And at that time, it was in a very early venture, which was trying to kind of develop and deploy e-commerce at scale in Africa through Rocket Internet called Jumia, where I spent some time heading their GA category management activity. But one of the things that stood out for me when I was looking at all the data that you could have in e-commerce is basically how you can use what we called at the time big data. There was no like word such as data science. And this is what became my primary focus. And I joined then a firm, one of the largest data science AI consultancy in Europe called Ecometrics, where I've led some of the data science, data engineering projects, but more generally, just things related to business applied strategy based on analytics. And this is really where I could kind of fulfill my passion for bringing together analytics and data as well as business. In the meantime, I've been very much involved in the startup ecosystem in ad tech, in data science and AI here in France and a bit in Europe, looking at things from different angles, more as an advisor, sometimes an angel investor. So this is when I really kind of started to get some grounding within the VC world, knowing a lot of them, speaking about with them, like specifically the early stage ones. So I had this idea, which became obviously an idea we shared also with Greg, my partner, which was about like venturing into real estate technologies, which at the time were not really developed. And this is how we kind of echoed our message, and we did find a good footing, and yeah, and then the rest is history.
And this history, I'd like to deep dive in it maybe. So can you explain to us how you and Greg met and how the fundraising of AO started? Because as a reminder, it's the largest PropTech fund in Europe. So I guess it was not super easy to raise 250 million euros. So how the start? How the fundraising journey went, and now what's the status? So where do you invest? How many portfolio companies you have? I mean, what are the key terms? And stage of maturity, geographies. What excites you?
Sure. Look, we launched this current capital vehicle structure. Obviously, it was like a big challenge, and I have to give a kudos to Greg, who's much more experienced than I when it comes to fundraising, with all of his financial and banking background, and also having set up more of a hedge fund on the real estate side. So yeah, definitely, it was definitely a challenge, and it took a bit of time. But once we had things ironed out, we could launch in 2019. We've done kind of our work investing very silently for a year. And then we had this more kind of a public announcement in 2020, right before COVID. And yeah, it is true that we had a very specific approach to real estate technology and the built world. And we wanted to have the ability to build ecosystems. And therefore, the strategy was to be stage agnostic, meaning that we typically invest from late seed to Series C or D. At first, we said stage agnostic until IPO, pre-IPO, but obviously since then, there's been an inflation in all the valuation and the rounds, which doesn't make sense. So for us, we even though we have not really restricted it, it's really kind of going from C to the Series C, which we think in Europe is where the capital and the dry powder is really needed. We also are looking at investment opportunity across the globe. We invested so far about, I think, 35% of our portfolio companies are in North America, so US and Canada, but always with an angle of bringing those companies who will be invaluable to them when they want to expand to the European market. Because one of our key views is that we'd like to expand the footprint of real estate technologies and the built world in general in Europe, where we have great footing, we have a lot of partners, we have obviously our LPs, but also adoption partners and people in real estate that we like, and we try to support as much as possible. So having this focus, looking at all companies, technology companies that are innovative within the European market, trying to back them, to expand them from one core market, which would be their domestic market, would it be in Germany, in France, in the UK, in Spain, or whatnot, and having the ability to help them scale throughout other geographies and become a European leader, and then eventually bringing them to US market. That's one of our core kind of strategy, which is still, kind of in deployment. We only launched 3 years ago, but we already have some interesting, let's say, route and uptake for some of our later stage companies, which are able to advance in this journey. And as I told you, like there is also the reciprocity of this, like the mimic, which is like going from US to Europe, and it is also something we'll be working on.
Yeah, clear. And maybe the only commercial question I would like to ask is maybe what are your USPs towards LPs and maybe towards founders? And the reason why it is important is because you were launched 3 years ago, but I remember in 2015, there were 3 PropTech funds in Europe. In 2022, there are 32 PropTech funds in Europe. So it really attracted a lot of different players, but also the size of the market is huge. And there is certainly a space for everyone. But still, what differentiates you from other players, from the LP and from the founder's perspective?
A very good question. And I think that obviously we hope to see more. I think that more is better because there is a need for a lot of capital to disrupt or to enhance the largest asset class in the world. So we do welcome all of these funds coming, and we see them as a kind of companionship as opposed to competitors. When it comes to our USPs, I think for both LPs and founders, it's really much kind of based on our own DNA and the way we have structured things. So obviously, I'm bringing a lot of the technology and the data vision within our firm and the way we assess companies, but also the way we help our LPs. So leveraging my own expertise and experience working with large groups in their data science and data transformation journey or digital transformation journey in order to replicate this or to adapt this to the very specific needs of the real estate industry. And this being across the board, like all type of real assets in residential, in data centers, in commercial real estate, in infrastructure and whatnot. And I think that part of that expertise obviously is something that is interesting and relevant to some of our portfolio companies. Obviously, scaling an engineering team or data science or data engineering team from a couple of people to tens or even like 50 or 100 is a pretty tough thing to do. We try to help them on these kind of things. Obviously, we also help them more on the real estate kind of footing and finding the right business model and understanding the way they can grow in an organic manner while working and sustaining their position in the market. So I would say that what we bring is pretty much consistent from LPs and also founders' perspective, and that would be a combination of real estate know-how and real estate background, as well as data science, technology background and expertise, and also a good infusion of what we would call financial engineering, because there are ways to do deals, there are ways to raise capital, there are ways to kind of deploy and develop a company that are different depending of your business model. And we try to be very supportive of all the founders that we back in order for them to maximize the value for their value proposition, their vision, but also for the overall shareholders.
Clear. Thanks. And I remember the first time I engaged with you guys around 2 years ago, pre-pandemic, so in another world. The first thing I was amazed about AO is really the fact that they have a chief data officer, which is you. And so I think this is a clear indication of the fact that um, you might be an innovative VC, meaning a data-driven VC, tech-powered, which has optimized processes, optimized tools, um, and I think allowing you to maybe take smart investment decisions that are backed by data, almost scientific decisions, not only based on gut feelings, which sometimes is the case. In the investment world. And so my question is, can you maybe clarify what a chief data officer does? Because all the VCs have research teams, but I think a data officer is more than this. And so can you clarify what is your role? And also, how do you capture data? What do you do with the data? Do you update the data? Have you identified any patterns? So just share a bit your passion with us.
Sure, sure. Of course. So look, I think that in terms of my specific role, obviously it's a bit specific because I'm doing things on the investment side, on the portfolio management, obviously on technology assessment. But I would say if you think about data in VCs, you have a lot of data-driven VCs that have emerged on a very specific topic where you have a lot of data to collect. So that would be a lot of things related like to consumer facing, pure let's say digital Web2 businesses where you're going to have like immense amount of data. One of the biggest challenge that I did find in our industry, which is the built world, is that most of the businesses that we back or that we look at are B2B businesses. And therefore the data and the way you can capture it is much more complex because this is goes behind doors and it's not something that you can scrape or whatever. So it's not even a technical issue, it's more kind of a source issue. Right? You don't have that many sources that you can actually get information from. So if I had to, let's say, draw down, let's say, the 2 or 3 key elements that are important to me in the way I've structured things at AO, first is to build the largest, at least as we know it, largest proprietary database of PropTech companies that we deem are VC backable. And this will be done by combination of many data sources, the likes that everybody knows, but we have, let's say, a certain way of filtering that data that would come like from likes of PitchBook, Dealroom, Crunchbase, etc., but also like all things related to real estate and real estate technologies where we can find information and kind of having the ability to bucket those companies and kind of clarify what are the companies that are currently VC backable and where they are and what are the kind of topic they're really working on. This is something that is quite important. Another thing that we've been doing is to basically keep tabs on also companies that have been public now, because a lot of companies have SPACed. Others are also now publicly listed. Obviously, like the largest, most renowned PropTech company is still Airbnb. You have also companies such as Procore, etc. So this is kind of the first strain of very large PropTech companies that now emerge as a clear winner in certain vertical, etc. So kind of this is where you will have more information to grasp from, because obviously those companies, they have more paper trail and stuff. For the earlier stage, it's a bit more complex. And it's really about kind of understanding also what are the most valuable private companies in PropTech and why. And understanding this would mean that you won't have the same kind of analysis made if you look at Europe or US. So just to give you, like, for example, one of the interesting data points that we're tracking is the number of unicorns and unicorns per geography. Okay, so we will define obviously unicorn is pretty easy. It's any company that is privately valued more than €1 billion or $1 billion. And a unicorn in our own definition for PropTech is any company that has a valuation of more than 200 million.
Okay.
So if you look at this, you will establish that in all of Europe, there are about 5 PropTech unicorns. That's it. Even 4 sometimes if you don't count one of them, which people say might not be like a proper, because people are kind of still arguing about the valuation. It has been said that it is valued over 1 billion, but some other people say no, etc. So there are some things. If you look at the US market, for example, or North American market, you have about 36 unicorns that are PropTech. So this gives you like another vision about like what is currently maturing. And if you just segment, for example, the number of unicorns that you have in the US per topic, it will give you another perspective of how much funding has been going to that and who have been the top investors and stuff like that, etc.
Yeah.
So we'll be doing a lot of work around these kind of things, like trying to understand the, let's say, organic movement of the market and trying to have a matricial view that is not only linked to, oh, this is a PropTech company, this is a VC backable PropTech company, and this is actually within this region, this is about this topic, etc. And kind of drawing information from that. There's also another thing that we've been trying to do is to understand the incumbents ecosystem. Incumbents meaning the companies that can either be very large customers of PropTech companies or companies that can actually acquire PropTech companies. And that's a whole other thing. And obviously, like data analysis can help us, draw some cues from that and understand what are the different things that are done. And then more from a, simplistic perspective. And, I'm not thinking that I'm saying anything path-breaking here. It's really about having some, good analysis that you can rely on, having actually clean information and data so you can have strong opinion about things as opposed to trying to predict, but really kind of understanding what's going on in the market that is already complex to grasp. Because if you think about this, the number of companies that we have in our proprietary database have been, I think, multiplied by 5 since 2019. So we're continuously adding companies, maybe a couple hundreds a month, sometimes even like north of 700s in a month, that we deem our PropTech companies across the world, and understanding how those guys or how those companies are actually interacting with each one another. It's not a very complex thing, let's say, from a data infrastructure standpoint. Obviously, it has its challenges, but it can be overcome. For me, it's not the challenge. The real challenge is what is the kind of business value you want to pinpoint to that as a VC? What are the things that you would like to take as part of your key actions? And this is kind of funneling our finding to some of the people in my team who will kind of reach out to them, or kind of helping us doing better comps when we look at some companies that we might invest in, or doing comps for our portfolio companies. All those kind of things are kind of subsequent of having a clean database that you can trust.
Yeah. Clear. I'm also a big fan of EO because of the company values and the company sense of purpose that we discussed already a couple of times. But since I understand more and more that VC is actually really like a people-oriented business, you really have to invest in people, and founders are also selecting their VCs also if they are on the same page, if they can feel that they can trust and have emotional supports from the VCs. So the human dimension is way bigger than I thought a couple of years ago. My question is more, what are your values, Othmane, as a person? What are the values that are important for you?
Yeah, so it's I think as you mentioned, values are very important for us as AO. And for me personally, the things that are very important are obviously honesty, and it is sometimes challenging to always find the right level of honesty when you have to engage with people, specifically in the VC environment where everything is about fundraising and going to the next round, etc., which can be pretty crunchy. So having the right level of honesty means that you still need to come across as gentle, even if you have tough messages to pass, which is often the case, because in this business that we're in, it is a bit challenging to always align between what you find in the market and a way to message it that can also be positive, while you do find things that are not always, let's say, positive business-wise. So I think that honesty is very important for me. Resilience is also very important. And the other thing that I would say is just what I would call the work value. Working value means that you have the level of commitment that you need to have to your work. And this is something that for me enhances the way of doing what you do as a person in general. And it doesn't mean only that you have to be, intertwined in only your working activity, but this is basically the working value means that you also recognize the work done by others. So recognizing everything from the smallest, let's say, stakeholder to the largest one by recognizing the work and valuing that. And for me, there is no kind of a hierarchy there. People are all spending time equally. There is 24 hours in a day. It doesn't mean because one person is CEO, another is an intern, that their work is not equal in a certain way. It took them the same amount of time. Maybe somebody has more responsibility than another, but I think that the working value is something that is important and kind of ties back with the honesty and resilience.
Yeah, I completely agree. And of course, I mean, individuals are the most important single assets or resource of a company.
Exactly, and most of the time they're the only ones. Like we are in the knowledge economy. A lot of the companies that we back that are software-led businesses or data tech businesses, etc. At the end of the day, those are products or those are business models that have been built by those people, and these people are very important in the way they can infuse not only the value but really kind of the energy within the company, and that's very important. And being energy positive means that you have to be able to recognize both your limitations as well as your aspirations and being transparent and a bit vulnerable about them. And this is something that I try to do and that I encourage people around me to do so also.
Thank you. And now let's imagine you have identified a super interesting company. You decide to start the due diligence. It goes to the IC. It goes to the you send the LOI, whatever, and then you decide to invest. And now starts really the relations with the founders. So can you share the way you work with founders? Do you have a structure? Do you meet on a very regular basis? Do you always take a seat? How do you work with founders?
Sure, that's a great question. So I try to kind of sequence this in a way that is very clearly actionable for the founders. The idea is that we're here to support and to enhance them while they are in their journey, and this can be done in many different ways. So what we usually have is after we invest, we'll have a kickoff session between my team and the founders team in order to go through many things. And one of the first things that we kind of address is more kind of the way of communicating together, the marketing, as well as things related to how we can promote them within our ecosystem. Because I've worked a great deal to build a PropTech brand and have a data-driven marketing strategy, etc. So those are things also that we do is like how do we work on social media, what type of content we put out there, how do we optimize for our website, etc. All things that we do internally. We don't have any external consultants working for us when we do those things. So we're trying to share as many of those kind of small hacks because I try to run also our operations as a startup. So kind of sharing those best practices, I find it a very interesting way to kind of initiate our working relationship with our founders that we back. So we usually have this kind of kickoff session where I'm going to bring like either my partner if he has been working on the deal with me or the analyst or the associate as well as obviously the marketing manager. And we're going to go through different elements that can make them more visible within their network and our network. Because for us, this is, as you said, a very intensive people business. And it is how can we make the company stand out by pushing forward the different people. So usually it's a sweetener. It's a good way to kick off, but we take also that opportunity to discuss about all the other elements, which are the business objectives. So I call this laser focused plan. And this is like, what are the things that you will need help from us that we can help on? And those can be related to the go-to-market strategy. So there is a sales marketing component to it, but there are also some other components which sometimes are more technical because for the go-to-market strategy, they need to have their product approved, or they need to speak to a regulator, or they need to speak to somebody who's a highly ranked person on a technical standpoint or something else. So we're going to see what makes sense for there. And then there is everything related to the recruitment. And again, recruitment can, depending of the stage of the companies, it's not the same conversation. Sometimes it's based on our own relationship and network, and we're going to make the right introductions there, or we're going to help them find the right partners in order to hire. And then there is the other part, which is more linked to the product and technology itself. And that would mean that usually I will spend personally some time with the founder that is leading the product or technology, or with the person who are relevant within the team, again, to align on what are the key objectives and how we can help. We always try to know our place, which means that we are investors, we are VC, we can help enhance, we can help connect. We're not going to do the work in place of them. This is why they're also obviously raising and they want to scale the company. But obviously, whenever we can, either sugarcoat some of the things that we know are best to do, or kind of share some of the best practices, or give them, kind of a head start on some of the topics that we know have been well done, we try to make those connections, either within our internal portfolio companies ecosystem or within our broader ecosystem. And sometimes it means for me, specifically on the tech side, is bringing people who are not in the PropTech ecosystem, because they will have, for example, a problem with their infrastructure, the data infrastructure or the cloud infrastructure. They say, oh, actually, our bill on AWS is just shooting up. How can we better optimize that? Okay, I know the partners from AWS who are working with startups and they can give them credits. I'm going to speak to those guys, or I'm going to speak to somebody who has been scaling something similar to their infrastructure architecture, so they can speak to them and see how they can work on those kind of things. So usually it's really kind of a pull demand. I come and I explain the extent of what are the things that we can do, but usually we already have a pretty good idea about this, because before we invest and we go to IC, we usually try to come up with a plan of how we can help them and how we can be strategic to them. And it is something that is clear to them when we have invested. So it's really about executing on those items once we have made the investment. But to your question first, I think we always try from something which is sweetener, which is establishing a great communication and see how we can enhance their profile and give them access to our network for sales traction.
Yeah, defining a work routine in some way. Great. I'd like to ask you maybe a bit of your opinion on the recent news. I mean, we will not discuss Ukraine, which is really such a dramatic and terrific situation, but more the net zero race. So, the EU Green Deal, the climate law, and all of this set of regulations that are coming into force, encouraging or forcing the built world to decrease by 50% the CO2 emissions by 2030, but 55%, sorry, and to be climate neutral by 2050. So all of this, and we all know. The question is, doesn't it have to start maybe with capturing the current energy performances of building, as well as seeing which buildings is generating the biggest amount of CO2 emissions? In order to be able to know where to start, you must first measure the CO2 emissions. But in order to be able to measure, my feeling is that governments should maybe have a way to capture data, to store data, or to treat data. And so my question is, should we encourage governments to be owners of data? Because I have the feeling that they won't be able to impose a regulation to decrease CO2 emissions if they don't even know what are we talking about. And should they own the data? Should they partner up with private sector? So it's a bit unclear to me.
Idris, I will reassure you, I think it's a bit unclear for a lot of people, even though we're working relentlessly on those questions. So when we launched AO, one of the first topic I looked at was climate tech within real estate, which was not a big topic. And I sourced some of our first companies in the space. And as of now, I think that 45% of our companies are ESG related. And they're trying to address the value chain or how to decarbonize the real estate industry in many different ways. And I think that the regulatory framework in Europe is definitely having, kind of a head start compared to the ones in the US and Asia. And that's a good thing. But I would also say that it's a bit slow still. And I would give you a very concrete example with one of our portfolio company that we backed called VSCAB. And those guys, they've been banking on a regulatory that is called RE 2020, which is basically like the deployment of the European regulation in France, that it's even more restrictive on knowing what is the life carbon assessment of a new building from the get-go, and having a certain criteria in terms of carbon intensity per square meter. This regulation was supposed to kick in 2020, in January 2020. it was delayed by 2 years. So it only kicked in January 2022. And when I'm speaking to large construction company, general contractors, or property developers, they're not seeing this as an enabler. They're seeing this as something that they have to control most of the time. They're saying like, even though they're making a lot of communication and there is a lot of marketing around like we want to have like a trajectory, etc. How can you know if they're trying to work on this really or not is how much they budget for it. I mean, budget is not budgeting in terms of marketing, but budgeting in terms of tooling and in terms of enhancing the workforce through different type of things. So either by budgeting new posts because they don't have people with that expertise, or actually just doing the right level of education within the existing people that are working for them. And I would say that I've seen a change for the past year. Like I've seen a change, and I'm not going to cite any of those like large property developers, but for example, like one of them, the climate topic was under the marketing department, and that's it. But the actual
Very
people who
signal.
can, the people who can mitigate, for example, carbon footprint in construction are the technical leaders, because those are the ones who are actually given the checks on what can be built and what not, and what type of construction material, with type of structure, etc. And within those teams are more pressured by the actual areas of the reality of the job. And now with the Ukrainian war, it's actually taking a bit more on the backseat because there's been the inflation and there's been also stress on the construction, not only on construction material, but also on the construction people. And therefore, whenever you have prices that shoot up, anything which was already kind of an increased price that is kind of tied to the new regulatory aspect is getting it even more complex. So people are even more stressed about those kind of topics, because if you didn't have to apply this new regulatory framework, you would already have an increase of cost. If you want to apply it, then it kind of even threatens the unit economics of the whole project and the way you're going to look at this as viability when you are a property developer. So coming back to your earlier question, which is how do we capture the information and the data? I think that depending of the value chain of the real estate, you have different ways of creating incentives. So I've been, for example, giving here an example about the construction industry and everything that is pre-construction. I think that there we're pretty much at a very, very early stage level. And I think that more regulatory power would be good. And I think that the lobbies from the construction industry have been very good at pushing back, because they also have a bargaining power with the leaders from the political leaders, because they just employ so many people. So they have an actual impact on the society. So I think that having more clarity over the regulatory framework and maybe giving some tax incentive related to that, I think it would be a good way to advance on these topics. Again, I'm not a specialist on policies, but I know that some of the things that have been discussed are gearing towards this. So giving some economic incentive to the construction people and the construction industry to advance on this, even though those are incentives that will not stay for the next 50 years, but just to kick it off for the next 4 or 5 years, being very aggressive in terms of incentives and tax breaks for people to take this as part of their journey. And maybe it can be tax breaks that are specific, for example, to working. So if you hire people who are related to these topics and you give them a footing within your company, you will have like a tax break on their social tax or things related to that. But it can also be related to specific materials which can be subsidized. So we know things with timber are important, or wood, etc., different type of structure, low carbon materials, etc., climate conscious materials, all of that. There are a variety of ways of kind of pushing this forward into the agenda. And then if we move down the value chain from construction to utilization or asset management, property management, facility management, this is where obviously the data, day-to-day data is more important. And we know that there is already like a big string of EMS systems that are out there in the market, so energy management systems and BMS, but it's still a very fragmented sector. And we know that a lot of the buildings are not equipped, and actually it's a bit costly to do the retrofitting in order to equip them. So this is, again, how do you create like an incentive, maybe again, tax breaks in terms of how you integrate this in the CapEx lifecycle. Because obviously real estate, they still have to refurbish some of their buildings at any given time within 15 years. It's usually the case in Europe. So how do you kind of introduce this? And how can you advance on that? And then you have other ways of capturing information when you are the state and being able to impose some of the things depending of the asset themselves. And here we backed again a company that is a satellite company called Satellite View, which is the first company with a certain type of LiDAR technology that gives you the ability to have the thermal footprint of any building in the world, and therefore being able to calculate and to measure what would be the energy leakage for any building. So it doesn't do it per units within a building, but it does it for building overall. And it could be a way also for regulators or states to be much more restrictive about this is the type of energy leakage that we are okay with in Brussels or Paris or Berlin or London. And therefore you will have the ability to pressure some of the stakeholders or the owners of those buildings to say, okay, so now you need to retrofit this building. And we think that retrofitting is going to be a big topic moving forward. There've been already some tax incentive in France about this, but I think we're still in the early innings. Data is going to be an enabler, and it's going to be an enabler at any part of this journey. But again, it's not going to be the same type of data sets, not going to be the same type of techniques that are going to be used. And the methodologies now needs to be cleared. I think that you have not that many, but still, now you have a growing ecosystem of startups and companies that are also more established, like incumbent, who can respond to these. But the problem is that the economic incentives are not there. So I just fail to find companies that are in climate tech within real estate that have staggering revenue growth. And if they don't have staggering revenue growth, it means that the pain isn't real within the real estate ecosystem who are not able to pay enough. And I think that's the testimony of the fact that what we're doing now is not sufficient, because people are not actually tackling this, because even though there are not all the solutions out there, there are still some, and all of these are unanimously, I would not say struggling, but none of them is having a growth that you will see in fintech or adtech or any other kind of businesses that have no kind of orientation towards being more green or being more climate conscious. So the EU Green Deal is really interesting in theory. Now it's all about the application and how those incentives are going to be impacting the different stakeholders within the real estate industry.
I do agree. Now back to last time we spoke in Brussels. If you remember at Realty, the real estate summit where I invited you, we were discussing how to have impact on the construction and real estate value chain, how to effectively increase the innovation maturity of the sector, and help the sector to do the digital transformation. And I was saying that according to me, the biggest driver of innovation, the biggest push for innovation, comes from the drive of the founders themselves, or the startup side more generally, who are really pushing for sales and advocates the need for changing, etc., etc. But then you said that we shouldn't underestimate the power in the hands of a chief innovation officer of a large real estate firm who can sign a multi-million euro deal and roll out a solution on big side of a portfolio. And of course, you have the VC side, which is as well crucial, because without funding, it's harder to have a customer-funded growth. You will probably not have a hockey stick growth, although the MailChimp story for me is really a legend. Revenue funded and built, and I think they sold the business for 9 billion euros. Can you imagine that? Without any VC on board. But now the question is, decarbonizing the built world would cost around $18 trillion. And we know that there is between 20 and 40 million dollars invested or deployed in PropTech year on year, year after year. And so my question is, where is this money needed going to come from? If you really need to invest $18 trillion, is it going to come only from PropTech VCs, or should government invest, or where is the money going to come from?
Yeah, I think that the financing question is actually really important. Obviously, everything that is CapEx intensive, the VCs won't be enough to cover all these costs. I think that the people who will be able to really kind of propel this will be the large real estate owners who have the more incentives and the most capital in order to do so. The private equity firms that are, or the more kind of infrastructure funds will be also the ones that are now having a lot of traction in the topic and are trying to be more ESG. And I think that they will provide the type of financing that is needed to really kind of retrofit and to help the built world decarbonize. The VCs are going to be super helpful to help the technology enhancement that is needed, or to develop and deploy the innovation solutions that will be helped, therefore, or that will be used by the different stakeholders. And the states also, through either financing, grants, or tax incentives, will also help do so. But it's going to be a collective effort. This is going to play their part. But I think that for the serious money is obviously going to come with the, let's say, much larger players.
Yeah. And I guess also the timing is right, because now if we have only 8 years to save the world, to say so, we need to have I mean, the VC money is perfect because they want to fuel rapidly the growth for some kind of companies which are not the capex ones. But okay, now last question, which is maybe more of a personal question, but I was always asking myself, if ever I become a VC, isn't there a risk in my private life isn't there a risk to have a downside in my private life to, assess every single aspect of your personal life in terms of risks or return on investments, or so to have a sort of biased grid view to assess and to make choice instead of just living it, always trying to control, to measure, to assess, and so lose of a bit of your spontaneity, I would say. So now, since it's been 3 years, what would be your return of experience here?
Look, I think that it's definitely bringing you a lot of bias, I was already, I'm the technology industry for the past 10 years. So I've been always with innovative companies, speaking to startups, speaking to founders, etc. But in a different capacity. I was mostly speaking, even like as an angel, I was always coming also as a kind of an expert or somebody who's going to be working on something operational. When you're a VC, it is true that things do change because you are here to take like an investment decision that can be very impactful on people's life, etc. So the relationship can sometimes be or feel a bit more transactional, and therefore you have some kind of a bias judgment sometimes. And also just from the fact that, even though I looked at a lot of companies before, just last month, for example, I think that we had 114 companies in the deal flow. So wow. That makes it a bit impersonal, at some point. Like you do not have the time to actually go and look at every company and, look at the background of the founders, or even take like an intro call with the founders. I don't have the time. Some people of my team are doing it. So like they're doing, obviously we're segmenting the work because nobody can do all of this at the same time. But it is true that there is part of it that is, obviously it's sometimes it feels less kind of organic relationship because you speak to people who are currently in fundraise, and obviously they have an agenda and you have an agenda. And even though they're a likable person and you're a likable person, you might not align. And it's most likely the case because at the end of the day, we see about 1,000 companies per year and we're going to invest in 5. So even though you establish good relationship for XYZ reason, you might just not invest. So I would say that it was a bit tough at the beginning, but now I'm just, coping up with it. It's okay. And I think that being honest and transparent helped me a lot in doing so. So it's a bit more of an upfront effort of, I'm trying to separate what people are doing, who they are with what they're asking. And this is a conscious effort I'm making. And it is an effort to make, but definitely it can also, sometimes create some kind of, I would not say disalignment, but some kind of frustration, which I can understand from a founder's perspective. But overall, I think that, I think that the risks are not too big overall. It's still a very enjoyable, work to do. And I feel privileged to be able to do something like this and being able to kind of propel the next type of technologies that will work in the built world. or not. Hopefully they will. but,
Yeah.
but overall, it's a very pleasing experience to be able to speak to such a diverse scope of technology entrepreneurs who are trying to tackle very different issues. And we can have all of our opinions and our subjectivity. At the end of the day, I think that as long as we have this type of honest and friendly approach, obviously everybody will have some upsides to it.
Yeah. Great. Okay. Well, I took a lot of your time today, so thank you very much for the conversation. I will see you next week at CRETEC London, and of course during Relevation, 29th and 30th of June. If you haven't grabbed your ticket, go to relevation.org before that we end up sold out. So thank you, Othmane, and can't wait to
Thank
see you
you
next
very
week.
much, Idris, again for inviting me and for this great conversation, and looking forward to see you both at CRETEC and Relevation.